Is the Toronto housing market about to collapse? Yes or no?
Here in Toronto right now, there's a couple things going on. Bubbles don't usually stabilize. They usually it's like, they call it a bubble because it pops, right? And
Yep.
just all of a sudden it happens. I think lead towards what we would believe is, there could be a recession in the making. And
Is the Toronto housing market about to collapse? Yes or no? Welcome, guys. In this video, I'm here with Scott Kearns. How are you doing, Scott?
doing
Doing
great,
well.
Michael. Good morning, good afternoon, wherever others are in the world. But yeah, excited to be here with you as always, and looking forward to a little discussion here about the Toronto real estate market.
Yeah. So just so you guys know, basically, Scott, like you're a realtor. Can you just like give yourself like a brief intro? Like, who are you? Where do you live? Like, what do you do?
Yes,
What do you eat during the winter?
yeah,
Like,
yeah,
you know.
absolutely. Well, yeah, my name's Scott Kearns. I work with the Thompson team. We're part of the Harvey Callis real estate brokerage here in Toronto, primarily downtown area, south of the 401, inside the DVP and 427, for those of you that are familiar, but the GTA primarily, Michael. I've been involved with the Thompson team for just about 3 years now. I was actually originally their director of marketing and communications. I have gotten my license over the last year or so, and yeah, pretty excited. I've always had a passion for people and certainly for real estate. And I love looking at things that are really what I would call trends in any industry. And, kind of being a little bit of what I would say is a forerunner to find out where things are going. And certainly I've been a full-time entrepreneur for 25 years. And so, kind of always driving process through what I think might happen or may not happen. And so, yeah, grateful to be here. And also just wanted a quick shout out to you, Michael. Thanks a lot for all your help with your digital media campaign strategies and just really fortitude in what you do, and love your belief in others, and certainly love being here this morning with you.
Yeah, my pleasure. I mean, thanks for being here yourself. So just so you guys know, basically, like I'm working with Scott basically on like generating more seller leads through YouTube ads and different like marketing strategies. So that's, how basically we're working together. All right, let's get into basically the subject, the topic of the video, which is like, first of all, are we in a bubble? Like, is the housing bubble, getting worse? Is this about to collapse? Is it like, how long is it going to last? Like, what should we do right now? What does that mean for realtors, for investors, for us looking to like buy or sell? Can you talk a bit more about that?
Yeah, well, let me give a quick backdrop. I've been living in Toronto for about 25 years, and minus a couple years down in the US. And so I've heard this term bubble for a long time. And, we've seen some ups and downs in the real estate market here in Toronto. We've seen some ups and downs in what I would call the economy, the Canadian economy. We've seen all kinds of different things. Market crash of 2008. There's been definitely, some upward and downward trends. When I hear the term bubble, I think like, the bottom comes right out from underneath this thing and it disappears, right? Like, all of a sudden crashing prices, of houses, 50%. What I really think a bubble could be defined as is, the mortgage crisis of 2008. Back in the US. And I specifically had some friends in the real estate game, primarily as investors, some as multiple homeowners, some as first-time homeowners that actually lost their homes. And so, I talk a little bit about, and while I'm not a mortgage expert, I do have a little bit of understanding when it comes to lending patterns, also bond rates and things like that affect mortgage rates, and obviously, push and pull inflation, different things that can actually cause really what are sort of the I would call them the pillars of the real estate business, right? So the more money there is in the economy, and that could be money coming from business that's going well, right? So when big business does well, that means smaller business usually does well. It means there's more money in people's pockets to spend, whether it be investment in real estate or whether it be upgrading on their home. Whatever it is, maybe buying a second property, potentially outside the city, or some people buying properties inside the city. So that stuff can all be affected. The other is the cost of capital, right? So the cost of capital is always a driving force in the investment of real estate. If you look back a couple of years even less than even just a year and a half ago, people were getting mortgage rates and, even 5-year terms at 1.8, 1.9, 2%. I mean, just about free money. Right. So there was a lot of people that were pulling money out of the market. And I've got some friends that work in finance. So, as we saw people pull money out of their portfolios and put it into real estate, that definitely buoyed the price. I also think that if you look at the real estate market over, a 20-year term, a 10-year term, or a 5-year term, I think if you look at Toronto over the last, if you compare it year over year, it's not really a valid data point to consider, because obviously through the pandemic and everything that happened there were some extremely irregular growth patterns. So yeah, coming back to the bubble question, I think that's a great question, Michael. A lot of things that will impact it. Here in Toronto right now, there's a couple things going on. And there's actually a couple things that are sort of a little bit more macro as well. But yeah, so maybe we'll talk a little bit about the micro and the macro factors. Let me know what I can share.
Yeah, I mean, whatever you prefer. Like, let's talk about the macro first, and then let's dive into like the micro.
Okay. Yeah, so I think the macro things that we want to look at, I mean, you hear about recession, okay, that could be a macro thing. And I think, I think I would call mortgage rates macro as well, and the Canadian economy. So if you blended all those. So what we've seen up until, I think the first increase came back in February of 2022. So mortgage rates were sort of floating around 2.9%, 3%. And we started to see these increases, these quarter basis point, half basis point, full basis point consistently. And what they were is that they were a control set by obviously the Fed that's trying to pull back the inflation, right? And so you've got this peaking inflation, some of the greatest inflation we've seen over the last 40 years, 4, 5, 6, 7, 8%, almost 8% inflation month over month. And so as they raised the rates, obviously the cost of capital became a little bit more. And so, somebody, let's say, as an example, somebody's got $1 million mortgage and they want to buy a house. So they've got their 20% down, they want to buy a house, they want to get $1 million mortgage. Well, if you look at $1 million mortgage back in February versus $1 million mortgage now, and you could have got, say, a 3.25% 5-year, and now you're looking at a 5.25% 5-year. Mm-hmm. The cost of that mortgage, all right, so your monthly mortgage payment is $2,000 more a month. Okay, so that's a pretty big factor on the macro level, right? So it's the Fed's response, or the government's response to inflation, the raising increase of the cost of capital to borrow money to buy the home. And inevitably what it does, it puts a little bit of downward pressure, because obviously the affordability of a home becomes a lot more. To afford a home that you wanted with $1 million mortgage, you need another $2,000 of after tax income to be able to pay for, right? So I think that's one macro thing to look at. That stuff always subsides. I think the mortgage rates that we had and the interest rates that we had, they weren't necessarily sustainable, right? I mean, and so, if you look back over time, I was actually talking to my dad. He bought a house, I believe it was in 1980 in Calgary. The mortgage rates at that time were 11%. He thought, man, that's a really good deal. He thought it was a pretty good deal at 11%. And I can specifically tell you that my dad had 4 income properties when the mortgage rates went to 22%, right? And so as they elevated, literally doubled to 22%, right? So we're not talking about 2% increases. We're talking about an 11% increase on an 11% mortgage. The ability to actually carry those homes, right, was pretty much impossible. And in Alberta specifically, a province driven by the oil economy, and the oil economy crashes, there's really no, so those are the things that kind of come into play, Michael. But yeah, I would say, so what do we have? We have one more, I think on December 7th, we have one more announcement for potential rate increases. Some people are saying it'll be a small one and maybe the last one for a while. We're already starting to see 5-year mortgage rates coming down. Variable rates usually follow. So all of that stuff, I think, is, affecting at the local level, right? So there's that macro picture. What has it done? I think the decline of housing prices. So here in Toronto specifically, depending on the price of the homes, right? So the average price of a home in Toronto, give or take, right now is about $1.2 million, right? It's pretty high price, right? However, the average price of homes has come off by about 12%, right? So the average price of a home, whatever the math was quickly on it, we'll say 1.22, and it's down to 1.1. It's about a 12% decrease, but they've seen that, and the month over month, right, is that we're seeing that flatten, right? So there's basically a stabilizing of housing prices right now. right? And so
Okay.
typically, you go back to that question, the bubble. Well, bubbles don't usually stabilize. They usually it's like, they call it a bubble because it pops, right? And
Yep.
just all of a sudden it happens. And again, I'll just go back in reflection to, 2008. That's what happened. It was literally a 1 or 2 or 3 day event. Within like 1 week, we saw the entire housing market crash in the US as a result of that macro thing that was called, there were tranche mortgages that were going on and stuff like that. So yeah, so that's one of the macro factors. The other macro factor I would say is the economy, right? So the economy has been pretty robust for many years here and growing. And, so you've got this economy where there's, if anything, it's, I've got other friends that are entrepreneurs, other friends that work in big corporate businesses. And the same thing is they've actually got trouble finding good people right now, right? So there's a lot of jobs available. Now we're starting to hear news south of the border that would tend to, I think, lead towards what we would believe is, there could be a recession in the making. And there's certainly things that define what a recession is. However, I think on the big picture, Canada is pretty stable in its economy base. I think the regulation around mortgage rates is pretty stable. And what I can ultimately come back to, and this is probably the ultimate macro factor, is basic economics 101, right? And it's called supply and demand, which drives price. So currently, the supply in Toronto is actually still pretty low. The supply of homes for sale is relatively low. If you look across the Toronto skyline, there are a lot of cranes. They are still building. I was just recently at a developer. It was actually Canderel, a developer out of Montreal originally, that's here in Toronto. And they're charging $2,000 a square foot for new build condos. That used to be kind of like that was the ceiling of the ceiling. These are kind of out quite a distance outside the downtown core. So, if Canderel is still building $2,000 a square foot, first of 3 towers, there's got to be something they know, right? And so I think sometimes you don't even have to look that far. But yeah, and again, the demand for houses, we've just heard announcements, 500,000 new immigrants coming into Canada yearly for the next 5 years. Typically, they say about 80% of that, 400,000 of those coming into Toronto, they all need places to live. So now as you come back to that investor question, I would say, well, if they need places to live and they're going to be renting, which is the entry point to anything, right? In real estate, the entry point is rent, right? Yep. And that's where people start. And then as they afford their down payment, they can move on. But with 400,000 new people a year coming into the Greater Toronto area, and then I think that the overspill from that, Michael, is people can't afford to live in Toronto anymore. So they go find jobs somewhere else. And then all of a sudden there's other, small towns. We saw a lot of that over the last 2 years. The perimeter is the 905 area of Toronto, the area code outside of, kind of the GTA that starts to expand. Huge rise in prices. So yeah, we've seen some falling off in those outside areas. But yeah, those are the macro factors. We've got interest rates, we've got the economy and inflation, and ultimately we've got supply and demand. So if you look at all of those things, I'm going to suggest we have a balancing of the market, right? We have a stabilization of prices, right? We have interest rates that are going to stop climbing. I always find that there's about a 6 to 8 week window. So if I said to you suddenly, Michael, your car payment's going to be twice as much, you'd be in fear for about 6 to 8 weeks, and then it would go away. You'd find a solution, or there's a settling. And so I think as that settles out and people get a little more used to what's happening, I think we'll see things. I very, very wholeheartedly believe that as we go into the January, people say the spring market in real estate. Well, I call January the spring market in real estate. So yeah, I think we've seen some stabilization on some things. I don't think we're going to see a massive economic downturn. Interest rates are, kind of flattening out into a place where, people can figure out how to afford their way into things. So the bubble question, I'm not so sure about it. And I wish I had a crystal ball, Michael. I wish I did. I probably wouldn't be sitting here doing what I'm doing right now if I did. So
yeah, that's the thing.
That's kind of the macro level, right? So those things, if you take a look at those, give some pretty good insights. And without, getting too much deeper into it, you start to look at, probably the ultimate thing is the cost of capital, right? But I ultimately go back to supply and demand. And so there's going to be more demand in the Canadian real estate market. I think we'll see a little mini surge here. Actually, I think, there's some increasing taxation on foreign buyers, and then there's actually a ban on foreign buyers that's coming up. So I think you may see a little influx of more money. So I don't think there's a bubble that's going to pop anytime soon. And yeah, and I'll just, so the one underpinning piece that I'll lay out that, I don't know what the exact numbers are for, investment properties in Toronto versus actually personal owned homes that people are actually living in for themselves. But, we've seen rent year over year increases at least 20% here in Toronto. That generally drives cap rates to a level that people like to invest in properties. So, that I would say there's one more reason that the Toronto real estate market could continue to expand past this stabilization point.
Interesting. Yeah. Great points that you covered there. Thanks a lot for that, Scott. Now I'm curious to know, as a realtor, are you getting buyers or sellers to talk about these fears, like some of their limiting beliefs regarding the current market in Toronto, or getting objections as to why they should not buy right now, or not sell right now, or maybe there's some confusion. And so can you talk about if you're getting this, is this affecting your business as a realtor? And also if so, what are you doing to counter this? What are you telling them to reassure them? And what's the plan basically to move them past these limiting beliefs?
Yeah, as a realtor, I mean, ultimately, I come from a place and where what I've been doing for 20 years previous to the real estate industry. It's all about being a service, right? So if you're out there and you are a realtor who made a bunch of money in the last couple of years and you changed your lifestyle, so you bought a bigger house, you bought a faster car, or, you bought a cottage, or maybe you overspent on a watch or something. I don't know, whatever people spend their money on. But yeah, you could be finding yourself in a bit of a pinch right now because of that. However, speaking specifically, being of service. So, I've had, 3 buyer clients that have completed deals in the last 3 to 4 months, and it was a patient process, right? So what I think is happening, I'll speak to the buyer side first. So the buyers are patient, right? So they got a little bit of fear around what's happening with interest rates, but as the interest rates were going up, a lot of them were saying, man, I better get a pre-approval. And we definitely saw a little range of time where I was like, get your pre-approval, get your rate locked in on a 5-year because they're going to keep going up, right? Which they were in the past 3 to 6 months, right? So, and then it became these little 120-day windows that I was coaching people on, saying or at least advising. And again, I'm never really going to tell a client directly what to do unless it's absolutely in their best interest. And when I say absolute, I know that I know. Getting a pre-approval on a rate 6 months ago, that was kind of like an advice that was do that, because that sets somebody up to be in that place where they could buy. Now, the other thing is what I'm knowing with buyers, they're saying, well, our interest rates going up, can I afford this? Well, the other thing that I think is actually more important, because people always find a way to afford what they need to afford. And I'm going to reference just off the top of my head. So there was a visual I saw on Monday on a call that I was on, and specifically it showed that the cost of carrying, and I'm going to say it was $1 million home, and I don't think that's the exact number, but the cost of carrying $1 million home, if you bought it back in February, right? So you got to imagine the market's at its peak. So you buy a home, we'll say that home was 1.2 million. Okay. And then the cost of the mortgage was at 3.25% or 3%. So whatever the net cost of carrying that was, we'll say it was $5,000, right? Was the end cost. You buy the home at 1.2, you've got a 3% mortgage, and you're paying $5,000 a month, give or take. So what the screen showed was that, well, the price of that home has come off by 12%, right? So you got $150,000 less on the price point. So you've got instead of a 1.2, you've got a 105 price on it, 1,000,005. And now the mortgage rates have gone up significantly by 2%, but the net carrying cost of that house that you would have bought for 1.2 in February and 105 now, and because of the increase in the mortgage rates, was only $300 more a month. So what I'm speaking into right now is that, it's about timing the market, right? And they say you can't buy and sell a house in 2 different markets unless you rent for a year or 2, right? But timing the market, right? So that's, I just say to some buyers, if you're, if they're waiting to see, our interest rates going up, our housing price is going to continue to go down. Well, the matter of the fact is that at some point, if you require a home, right? People need new homes. If somebody's already in a home, they may not be upgrading, but somebody gets transferred a new job, right? There's, marital separations, those cause people to need new homes, all kinds of different things. But ultimately, the last 3 buyer clients I had is we go in, we look for the right value on a home. We've got some pretty precise ways of evaluating home prices in the current market. And you go in and I'm always advising, we do not want to get into a multiple bid situation. Now, again, I mean, what a blessing it is right now. You could look, this buyer's market in Toronto, as I call it, a little bit buyer's market, but there used to be homes around the corner from me that would go up. They'd, list them at $999. There'd be 28 offers, and they'd sell for 1.6, and you go through enough of that, right? So at the end, at the beginning of kind of the last 6 month cycle, there was buyer fatigue. People were just flat out exhausted from an offer after offer after offer. So, and maybe real estate agents were too. However, homes were turning very quick. You just had to have the buyer that had the most money in those 28 offer scenarios. Yeah. So, I think that, buyer fatigue turned into buyer patience, right? So you've got a lot of buyer patience in the market right now. And I think that's going to shift a little bit. I can tell you that, we had a client recently and it didn't feel like a buyer's market. We put an offer in on the first home. Unfortunately, there were multiple offers, 3. We did not get it for our client. And we did it again and we did not get it on the second one. Very fortunately, on the third one, we were one of 2 offers and we did get it. So that didn't feel like a buyer's market. You're still out there competing. However, I think the key is to really know your price point as a buyer, really be rock solid on, kind of what, as I always say, there's a good deal, there's a fair deal, and then there's a max price that we would pay. And that's really very simplistically how I would consult any buyer client on. We've got to know our number, and then we've got to look like, what's the good deal price, what's the fair market price, and what's the max price we would pay if you get a little emotionally attached to it. So I think investments in real estate in the city of Toronto are great investments always, right? I believe that it is a city that no matter what happens, up or down, and as I said, the stabilizing. So, and I would say that recently the last 3 buyer clients that I had were really happy to get into the market now, and so a year from now, it's like, man, why didn't I get in back in 2022, right? And I mean, and I can tell you from my own personal standpoint, man, why didn't I get in sooner, right? Yeah. And if you look in the rear view mirror of Toronto real estate, you could probably say, man, I wish that I had got in sooner, right? Yeah. So how am I helping buyers with limiting beliefs? Just sharing of information, right? No different than what I've shared here. There's again, no crystal ball. Nobody knows what's going to happen. And ultimately, somebody's got to buy a house they can afford, right? And they've got to have the wherewithal. As I said, there, some pretty good regulation around Canadian mortgage rates, and we're seeing some changes in that. But yeah, I mean, there's still a lot going on. I mean, you try and get somebody to do some construction work on a renovation here in Toronto right now, and you'll know that the real estate market's still pretty good because it's tough to get somebody to come even within a year to do renovations, on houses and stuff. So really? I would say to buyers, do your homework, get yourself a good agent. And ultimately, pick an area that you want to be in, and just timing is important. And I do believe getting the right realtor. I mean, there's 70,000 realtors in the GTA. So you said, how's the market affecting realtors? Well, it's probably affecting them. We're definitely a little slower. I'll just specifically speak to a pretty high end listing that's north of $5 million. Well, there's a reason that house hasn't sold in the last 60 days. It's not because it's priced, it's not priced properly. Where there used to be, say, 1 home sale a month in C2 and C9, 2 combined areas, there have been 5 sales in the last 120 days in those 2 areas. So I would say, the demand in those areas for that price point, but those aren't the average homes in Toronto, right? And so, helping people is really educating them. I think that's really the answer to the question, Michael, is how do you help people get through their limiting beliefs? I think educating them, making sure they're pre-approved on mortgages. I think a few people may have got their hands tied when they wanted to purchase things, and I've heard some things around certain things. So get the right realtors working with you, people that know what they're talking about, understand the market. And certainly, I'm never one to say, hey, just pick one realtor. I mean, go out and interview 2 or 3 realtors and find out who the best one is to help you. And I do actually believe in that process, and being a former business owner, no different than hiring somebody for my business. I would interview multiple people. And I think having a good mortgage broker, we've got a guy that we work with, and Sebastian is incredible. He's extremely knowledgeable, and he's really good at what he does. And that just helps, that helps me help our clients. So I think those are 2 things that you could have in your hip pocket right now that could really serve you as a home buyer.
Nice. Yeah, good points. Did you want to like touch a little bit on the sellers as well?
Yeah, you bet. Yeah, wow. Best time to sell. Well, again, the seller side really comes down to, I had a long conversation with one of our clients. We have a listing on right now. The home hasn't sold. I just said, here's where the market is. These are the time periods, September, January, April. Those are kind of the 3 time periods that typically, I think, probably the biggest thing for sellers right now, right, is if you're not motivated, it's probably not the best time to sell, right? And I mean, motivated means, unmotivated sellers have unrealistic expectations. And so helping manage the expectations for a seller. So a seller that comes in and says, hey, listen, my neighbor got 1.5 for his house back in May. And, so I think my house is worth at least 1.5. Well, that's just not true anymore. And what happened in May is not happening now. Now you could wait another year and maybe next May. However, what we know is that was a real peak. So, I think that's it. For sellers, if you're motivated, again, there's a couple different strategies to enter into the market. The 2 primary strategies are under list and with an offer date and create as much energy, excitement, and basically viewings of a property, get as many people in as proper. I'm not a huge fan of that strategy. Maybe yes, sometimes. However, I think the best thing for a seller to do is understand the real value of their home. And the number one question I will ask a seller is, like, on a scale of 1 to 10, where's your desire level to sell, right? Where's the necessity of selling your home right now, right? And so somebody that's moving, transfer. I think I've seen more houses for lease. Like, I'm talking a little bit more higher end houses and, like full homes for lease in this city. And I think that's for some people that maybe just thought their house is worth more and they're not going to sell it right now, right? But they're still staying invested in the Toronto real estate market. So yeah, sellers, same thing. Get a good agent that'll work hard for you. I'm just going to share a real quick story. My neighbor actually came to me and asked me a question about some stuff, and it's an estate sale out of the city. It's not my market, and I would always refer out in those markets anyways. But yeah, the realtor was recommending another price reduction. And as I got to the heart of the matter, the listing agreement ends in about 3 weeks. And I said, well, isn't that convenient, right? And so, find a real estate agent. If you're a seller, find a real estate agent that's committed to get you what you want. I always say, I believe my number one job is to, serve my clients, buyers or sellers. And if I'm on the buyer side, my number 2 job is to get them the most amount, on the buyer side, to get them the house they want for the least amount of money possible. And on the seller side, my job is to serve them. And number 2, to get the most amount of money for them, on the transaction. So yeah, I just think you gotta really pick somebody that's in it for the long haul. Our call on Monday, with our sales team, patience was the word that came out, right? So I think it's a great time to be patient. If you're a horse person, they call it take a deep seat and a long look, right? And it's like sit back, enjoy the ride, and just keep your eyes focused forward. And in the meantime, there's real estate, like everything in life, is cyclical, right? What goes up must go down. The universal law of balance, right? And those are things that I like to consider.
Yeah. Awesome points. Thanks a lot for sharing, Scott. Appreciate that. So yeah, that was pretty much it, guys, on that video on like the Toronto housing market. How's it doing right now? And is it about to collapse? Yes or no? So we'll see you guys on the next one.
Thanks, guys. Thanks, Michael, for being here with us.